PEPE might be lining up its next big move. According to Crypto.news, price has pulled back into a dynamic support zone that has been respected since the March low, while the broader structure still shows higher highs and higher lows. That kind of retest often decides whether bulls have the energy to launch a fresh leg up. Here's the setup traders are watching. The article explains that PEPE is compressing between a rising trend line and a heavy volume area, known as the point of control, which is acting as near-term resistance. When price gets squeezed between rising support and a major volume node, it creates an apex where the next break tends to travel fast. Now the bull case. Crypto.news notes the market structure remains constructive. Every dip into ascending support has produced a higher low, and rebounds have pushed to higher highs. If buyers can reclaim the point of control with expanding volume, the playbook is a rotation toward the prior swing high, and momentum can extend if participation keeps building. What would actually confirm strength from here? The article highlights three tells. First, a decisive daily close back above the point of control. Second, rising volume on the breakout rather than a thin push. Third, the higher low pattern continuing right off that dynamic support. When all three line up, probabilities favor trend continuation. There is a bear case too. Crypto.news points out that repeated rejections at resistance show supply waiting at the point of control. If PEPE loses the dynamic support on a closing basis and volume accelerates against it, that opens the door to deeper corrective pressure and invalidates the immediate breakout idea. In simple terms, that rising support is the line in the sand. How to think about it in practice? The article suggests treating the range like a decision box. Inside the box, expect chop and be patient. A clean move above the box with volume favors a bullish rotation toward the recent high. A strong move below the box argues for waiting until a new base forms. If you are managing risk actively, think of support as defense, the point of control as the gate, and the swing high as the target. Participation matters. Crypto.news emphasizes the volume profile because the point of control is where the most trading has occurred. Reclaiming it means the crowd is willing to accept higher prices again. Confirmation improves when spot volume and open interest expand together during the move. What to watch this week? First, the interaction with that rising support. Do intraday wicks dip below and close back above, or do daily candles settle underneath? Second, the first retest after any break. Quality breakouts often retest the level they cleared and then hold it. Third, behavior at the prior swing high. That is the usual profit-taking zone. If price pushes through it with firm volume, it signals trend strength rather than a simple range tag. All three checkpoints come from the structure described by Crypto.news. Risks to respect. Compression patterns can produce fakeouts before the real move. Broader market conditions matter. If the majors wobble, meme coins usually amplify the move. Keep position sizes sensible, define invalidation before you enter, and avoid chasing candles without volume. The signal here is not just direction, it is how price behaves around support, resistance, and participation. Bottom line. As reported by Crypto.news, PEPE is coiling at a familiar springboard while resistance sits just overhead. Hold the dynamic support and reclaim the point of control with real volume, and the path of least resistance is a run at the swing high. Lose that support decisively, and bulls likely need more time to rebuild the base.